Hello there, this is James, and you're watching OneRoyal, and it's live. Now, these little series or these little daily shows I do is all about discussing what is happening in the market and what the market's talking about. Now, these, of course, are live shows, which means you can talk to me, ask me questions anytime at all. And by all means, join the conversation. In today's little program, I want to talk about probably one of my most favorite assets I've ever traded. In fact, I would say it's my first love. As well as that, I want to talk about what the market is focusing on this week and an interesting potential indicator as well, or unknown indicator even. But before we get into all of that, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, I want to talk about a record breaker today. And yes, this is the very first thing I've ever traded. So those who know me and as you get to know me a bit more, you know I'll talk a lot about it. And that, of course, is gold. Because gold has hit a new all-time high today, basically based on several things. Really, the tariff concerns, and we'll talk a bit more about that in a little while. And plus, obviously, sort of comments about Gaza for Trump 2.0 has mentioned. But like I say, we are now looking at the yellow metal hitting like almost an all-time high, almost on a daily basis at the moment. And in fact, I'm going to be doing a specialized webinar on Wednesday on gold. And that's the question, will it get to $3,000? Tomorrow, I'll share with you the link. But yeah, again, it's hit an all-time high. Let me just bring up my chart to share with you, and now we can have a look at gold. Because like I say, currently at the moment, potentially it is on a pretty strong uptrend. Let's have a quick look at it. Okay, so let's bring this down here so you can see it a bit better. As you can see, currently it's trading at $2,906 an ounce. And like I said, the US session has now been open for about 33 minutes. And though I am at some point expecting potential profit taking, or about a profit taking, which is what will happen usually when you have an asset hit all-time high, at the momentum at the moment, the momentum is really with the yellow metal. Like I say, this is being mainly driven by obviously tariff concerns, Gaza comments, and the overall, worry about the impact these tariffs can have on the economy. In particular, inflation, okay, is a really big concern. And as we know, gold can indeed be a hedge against inflation. So this is another thing which is driving the yellow metal. Can it get to $3,000 this year? Okay, well, like I say, again, I'll be doing a webinar on that on Wednesday. I'll share the link with you tomorrow where I talk about that in a lot more detail. But potentially, there's a lot of people out there who think gold can. And don't forget, I mentioned in a previous video on the blog, of course, that, there was about, 95 billion of gold was bought by central banks last year for their reserve. And the biggest buyers were, of course, Turkey, India, and I'm trying to remember now off the top of my head, I believe it was China. So there is a demand for the yellow metal as a reserve as well. But like I say, we'll talk a bit more about that on the Wednesday webinar I'll do. Again, I'll share the link with you tomorrow. But at the moment, my beloved yellow metal is at an all-time high. On other news, and this is what I think the market will be talking a lot about this week other than tariffs. Don't forget, on Friday, the NFP disappointed the market, okay? It was announced at 143,000 new jobs versus 169,000 expected. Now, not only did this not really, this had a little bit of an impact. We saw a bit of a weaker dollar initially, and we'll look at obviously the currencies in a little while. But I think the main importance about this is that it now brings the attention onto the Fed. The Fed is really in focus because don't forget, last year, before December, the market was excited, thinking that we're going to see several rate cuts from the Fed this year. Okay. They were pretty hawkish, all right, last year. And they were also really pretty hawkish in their current or the previous press conference they did last month, where they said they were in no hurry to decrease interest rates. Okay, no hurry, because they were concerned about obviously repercussions of what is going on. However, this is where they're in a bit of a rock and a hard place. And this is what I think is going to prove to be really, really interesting. Because obviously they pay a lot of attention to the labor market, in the US to base their decisions on. And if you're seeing like a slowdown in job growth, like we did with last week's NFP, they might be forced to act. And here's the thing, we're going to get maybe potential hints this week of what they may do or what they might be forced to do. Because, of course, Powell is testifying in front of Congress on both Tuesday and Wednesday. And in these little testimonies, that's the correct word, isn't it, of course, in front of Congress, he discussed his vision or his opinion of how the market is, how it's acting, and what they might have to do in the future. But here's the other thing. And this is what is also concerning the market. And like I've already mentioned, this is what is also helping drive gold prices. This week, this Wednesday, we'll get the US CPI. And in my opinion, I think this is the major news announcement this week is the US CPI. Now, it's expected to come in at 2.9%. Okay, 2.9%. Now, okay, like I say, their target is 2%. So we've got this double whammy here, okay? There's concerns about what tariffs is going to do, okay? You have slowdown in the market, in the job market, plus you have the likes of Trump 2.0 sort of trying to push them to do rate cuts. But at the same time, if inflation is still high and above their target, and it might even risk going higher, could they do the opposite? So you really are in a rock and a hard place to find out what they're likely to do. But this week might give us a really good indication on what they may do next. On other news, of course, I can't get away with not talking about this every day. Trump plans to impose 25% tariffs on steel and aluminium. That's right, I said aluminium. That's how he said it and how it should be said. So, yeah, this is why the market is a bit spooked. Not as much as it was spooked 2 weeks ago when he said he was going to do tariffs on Canada and Mexico. But, yeah, the market is still a little bit spooked by it. And, of course, we're expecting more tariff threats from him as well, which, again, could spook the market. Now, the countries in question who sell the most steel to the United States includes the like of Canada, Brazil, South Korea, and Vietnam. So it'll be interesting to see how they retaliate or how they react to these apparent tariffs, which are coming in almost immediately. On other news and other things which are happening this week, we've of course got UK GDP. It's expected to come in at negative 0.1%. Don't forget, the Bank of England reduced interest rates last week to 4.5. So they're obviously watching the British economy or the UK economy quite closely to see if they need to inject more steroids into it by reducing rates. So that's going to be quite an interesting indicator. Don't forget the last couple of GDPs of the UK has declined or has been stagnant. So that would be really interesting. Friday, we have US retail sales. Don't forget the modern day economy is based upon us spending our money. So yeah, that's supposed to come in at 0.0%. Again, let's see what the Fed might do to that. Anyway, before I want to go on to another interesting topic, let's have a quick look at the market and see where we stand currently. So And if you have a look at gold, let's have a quick look. First of all, how the S&P 500 is opened. This is on a daily, obviously. Again, very little stagnant, not really spooked that much or reacting that much on the back of the S&P 500. Same on the back, of those tariff threats today. US, well, NASDAQ, shall I say, again, is pretty similar as well. If we're moving on to the currencies, I look at the euro, because the euro is really interesting me at the moment, because, there is potential, and I'll do more stuff on that in the future. A lot of people are expecting this could go to parity. At the moment, it's trading at 1.0314, so fairly flat. The cable, which will be interesting with the UK GDP coming out this week, also pretty flat at the moment at 123.83. Tesla, okay, I've been doing a lot of talk on Tesla at the moment. I'm around about 358 at the moment share price. I think this is a really interesting stock to watch. I really do, because I think after the highs of the Trump excitement last year, this has a potential of being maybe overvalued. So I'm keeping a very, very close eye on that. So anyway, there's something else I want to talk about. Before I do that, a quick sip of water. That's better. Now, something else I want to talk about. Obviously, it's earnings season. And last week, we had a lot of the big tech companies do their earnings and disappointed the market. We had the likes of, obviously, Google, Microsoft, and in particular, I was talking about last week, was Amazon, which disappointed the market. Now, there is a totally different type of company, okay? Not AI, not tech company, okay? And it's not part of the big Mag 7, but it's still a pretty big company. And they released their earnings today. And that, of course, was McDonald's. McDonald's. And their earnings did indeed disappoint, because it came in at 6.39 billion versus 6.44 billion. Now, McDonald's have put this down to the fact that, customers are spending less. Now, here's a really interesting thing about McDonald's. Okay, and we'll have a quick look at the share price at the moment, because it hasn't reacted. It's actually spiked up a little bit higher in the opening of the US session. But there is a theory, okay, called the McDonald indicator. And the theory is, when there is signs that less and less people are spending money at McDonald's, bear in mind, it's supposed to be like a sort of a budget fast food, cheap type fast food chain. When there's less people spending money in McDonald's and it starts to, decline, that's an indication or potential indication that we're facing a potential recession. Because it makes sense. If less people are spending money on what's supposed to be a budget fast food restaurant, then clearly people are worried about the state of the economy, and they're not spending their money, or they haven't got the means to spend the money. So, in some ways, that's quite an interesting, thing to look at. Is a little bit like maybe potentially an early warning indicator, what might be on the horizon. Okay. And so I think that's quite interesting. It's quite interesting. Anyway, let's have a quick look at their share price, because obviously it's tradable with OneRoyal. At the moment, okay, let's get rid of that so you can see it properly. As you can see, so on a 30-minute chart, it spiked up higher. Nobody's really paying attention to the disappointed earnings at the moment. But like I say, that's just quite an interesting thing to think about. It's currently trading what now? $298.20 a share. So anyway, still quite interesting. Anyway, in a wrap up of this week, it's going to be a busy week. And it's got obviously Powell testifying is the big one. US CPI, which is huge. UK GDP. Germany CPI, which would be quite interesting to watch. We have US PPI, which is Producer Price Index, and US retail sales coming this week. So expect a busy week ahead. Now, don't forget, these little shows are live. Okay, so you can chat to me anytime you want. Let me know your opinions. Ask me questions. Just say hi if you like. Let me all fit my let me know your feelings on where you think gold's going to go. If the McDonald indicator is real or not. What will the Fed likely do in the coming months? Things like that. Share with me your ideas. That sort of thing. Yeah, because it is life, and life means life. If you're not watching this show live, by all means, put in the comment below what your opinion is and what you think. So feel free to do that as well. And if you like this type of content, you like this type of this program, you enjoy what I do, give us one of these. It's nice to know that you like what I do. And plus, as well as that, subscribe if you like, or even hit the notification button so you know next time I'm going live. Anyway, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.